Hello everyone, welcome back. This is Jeff Craig from My Steel's Iron Ore Department, here to give you the latest on China's ferrous market. Let's dive in. China's ferrous market saw a general uptick this past week, driven by a sharper than expected recovery in downstream demand. All ferrous varieties experienced price gains except for coking coal and coke, which remained under pressure due to persistent oversupply. Market confidence was further strengthened by last Monday's high-level private economy symposium attended by President Xi, where efforts to promote the healthy and high-quality development of China's private sector were emphasized. Additionally, negative sentiment over U.S. tariff hikes eased somewhat following reports that Trump signaled interest in a potential new trade agreement with China. Total steel inventories increased for the 8th consecutive week, though at a lower pace, suggesting a potential imminent inventory peak. Apparent demand rebounded sharply, with long steel leading the recovery, as construction site activity accelerated after returning to work following the Lantern Festival. Infrastructure projects outperformed the real estate sector, which remained constrained by funding challenges. Although the financial situation of leading property developers has improved compared to last year. Moreover, the resumption of work in some regions like Southwest China has been limited by rainy weather, though recovery is expected in the coming weeks. Mini mills have gradually resumed operations, while integrated mills saw a second consecutive week of output declines, as previously predicted. Despite this, hot metal production is expected to recover soon, supported by the ongoing recovery in downstream demand, which has bolstered raw materials during this time. Iron ore, in particular, outperformed as portside inventories declined despite rising arrivals, with strong discharge volumes at ports. In addition, steel mills maintained low inventories, sustaining replenishment demand, though most procurement remained on an on-needed basis and in smaller quantities. The 9th round of coke price cuts was successfully implemented last week, and an additional round is expected this week. The resumption of coal mining occurred more swiftly than anticipated, adding downward pressure on the coke market. Although coke margins have remained below break-even, leading to a decline in coke supply, this has not been enough to alleviate high coke inventories, as steel mills continue to adopt cautious procurement strategies. Looking ahead, China's ferrous market will likely see more upward momentum ahead of the 2 sessions government meetings, with the market expecting additional stimulus policies. If the recovery in downstream sectors continue, it could further support market confidence and benefit all ferrous commodities. Additionally, iron ore fundamentals are expected to improve with the bottoming out of hot metal production and falling portside arrivals. However, the sustainability of the recovery in steel demand remains uncertain, raising the likelihood of a temporary correction following this past week's sharp price gains. Furthermore, new tariff measures imposed by additional countries on Chinese exports may add further volatility to the market. Thanks for tuning in to this week's China Ferrous Market Update. See you next time.